Today, we shall be talking about what is auditing, the meaning, objective, definition. See, particularly the word audit means to check, to verify. Whatever work which we record in the books of an organization, you record it on a daily basis, the journal is prepared, the ledger is prepared, and so on, the books are prepared. Whatever we are writing in the books, is it according to the rules and the regulations prescribed for that particular organization? If you are talking about a partnership, it can be a company, whatever the entity is, every entity has made prescribed rules and regulations. Are we recording our day-to-day transactions according to that rules and regulations, according to the particular criteria which is mentioned for us? Are we following the guidelines, the set framework which we are supposed to do? When we check all this is called audit. So in the day-to-day routine, when we are conducting an organization, the business is running on, whatever you are writing in the books, that written record has to be correct. This check of that written record is called audit. See, there can be two things. What is reported in your financial statements, that is what you are writing, your accountant, your clerk, whatever is writing in the financial statements. And then there is one more thing. What is required as per the standards, as per the criteria, as per the framework, the rules and regulation. Are these two statements just the same? Or if there is a misstatement, there is a difference in these two. I mean to say, what you have written in your financial statements and what you are supposed to write in your financial statements as per the rules, are these two different? If there is a misstatement, if there is a difference in these two, then this difference has to be reported. It has to be brought into the limelight that you are doing something wrong. Whatever you have written is wrong. The process of checking this, the process of reporting this misstatement is called audit. So it's a very simple process. It's a very simple exercise. You just check what the entity has recorded. So it is an inspection. Audit is an inspection of your books of account. It is an evaluation. It is an examination. It is a check. Whatever you have made your financial statements of that particular entity, it will be evaluated. The books will be evaluated. You know how your answer sheets were getting marked when you were in school or in the college or in the university? Your answer sheets are getting evaluated, and this is how you are getting your rank, your percentage or percentile. So similarly, the books of the organization will be evaluated if everything is in order or there is some difference. Now you have to check whether the claims in the statements are fairly and accurately represented. Are you fair, giving you a fair and true view of the actual things are recorded in the books or not? So this check and verification is called audit. It is to check, audit is to check and verify whether all the financial information, whether all the transactions in the form of financial information are according to the rules and the regulations and the criteria mentioned. And you will be examining your records very intelligently and scientifically. It is not that A person will have his own criteria of writing and B person has his own criteria of checking. No, it is not like that. It is a based system, intelligently and scientifically examination of records. Now, when you systematically examine these financial statements and other related accounts, other related records of an organization, in simple terms, this is called audit. Now, where did it word originate? It originated from the Latin word audire. Audire means to listen. In the ancient times, the number of business transactions were comparatively less. The population was less, and so were the number of transactions were equally less. One person, he used to read all the transactions to the other person, and one person used to listen. The listener then used to give his opinion that whether everything was in order or not, either all the transactions, whatever is written is correct or not. But in today's world, the scenario has outrightly changed. There are numerous transactions, everything is digitalized, everything on computers, so that practice to listen is no longer in use. So what is the present day practice? We will be recording all the transactions and then the audit will be conducted. When we talk about audit, we say that we have to check, we have to verify. What have you to verify? You have to check whether all the transactions are on the basis of information and the vouchers. Now, every transaction which you are recording in the books of account, it will have a back evidence. Every transaction will have either a voucher to support it, or bill, or invoice. So the person who will be conducting the audit, he will be checking these transactions on the basis of these evidences, which are called vouchers, bills, or invoices. The auditor will be checking the books of account and the profit and loss account also. If an expense is shown in the books of account, he will be checking, is there a voucher for the same expense? Is there a voucher to witness that expense? If yes, very good. If a payment is shown, then you have to verify, is there a bill for the same, or that payment is just shown just to show that you have paid. If there is a bill supporting evidence, that means it is an accurate and fair view of your records. When we talk about the check, first of all, the books of account will be checked. You know what does this mean? All the journal will be checked, which includes the cash book, purchase book, subsidiary books, all the sales book, everything will be checked in this. Then your ledger will be checked, your trial balance will be checked. When we talk about the checking of the financial statements, you will also check the trading account, which will be showing your gross profit or loss. And then the profit and loss account, which will reflect your net profit or loss. And ultimately, the auditor will also be checking the balance sheet. He will be checking, going through all your assets and liability. And just as I told you, there should be a supporting evidence, either a bill or a voucher, as evidence for whatever expenses you have shown here. So now, to check and verify this true and fair view of the company's records is called audit. This is also called financial audit, and also company audit is also the same term, to check all these books of accounts one by one and verify them. See, once accounting work is done, auditing work starts. Accounting ends and auditing begins there. Auditing starts where accounting ends, so goes the saying. Audited accounts are verified and accurate and reliable. If the auditor puts a stamp on your accounts, that means he has verified, he has checked all the accounts. That means your records are accurate and reliable. The tax officer always trusts the audited accounts as they are certified and stamped by an auditor. Because he has checked everything, so the tax officer will rely that now everything is fairly shown in the books of account. The work of tax officer gets easy if external auditing is done. And if you don't go for external auditing, then it is very difficult for the tax employees to check each and every detail. Because your accounts are stamped by an auditor, that means it is all trusted and accurate. Apart from the financial records which I told you in the previous slide, the auditor also checks the non-financial records. He has to check every working of your organization. So he will be checking your employees register, whether the proper number of employees are shown there or not, right? Shareholder register also he can be checking. He is trying to he's trying to make out if you have told something inaccurate, if you are trying to hide out your incomes. So that is what is going to be checked by the auditor. Now, when we come to the definition, the first definition I'm picking up is from the Institute of Chartered Accountants of India. What do they say is, it is a systematic and independent examination of data. So what is the meaning of systematic? Systematic means every work, every check will be system in order. It will go one by one and it will be totally systematic. There will be no huffad, there will be no haphazard process. So every check will go in a systematic way. That is why the authenticity of audit also increases if you are going in an organized manner. Now, independent examination here means that the person who is going to conduct the audit of your organization, he has nothing to do with your business. He will not show any biasness towards your business only if he is not dependent on you. He is an independent person who has come to audit your books of account. If a person from within your organization is conducting the audit, then what is the fun of conducting an audit? Because he is your employee. If a person from within the organization is conducting the audit, he is your employee. He will be a yes man to you. He will be biased towards you. So that is why when we talk about the audit, here we talk about the independent examination, means that the person is from outside, he has nothing to do with your business, he is not biased towards you, he is not your employee. Only then he will be giving the true picture of your records, only then he will be checking it very professionally. He will be examining all your data. Data here means all the records, all the books of accounts, and your performance. That can be financial, that can as well be non-financial. I told you he will be checking the non-financial registers also. So financial statements, so I told you there will be the trading profit and loss account, the balance sheet, and every journal and the ledger will be checked. And the non-financial records also, whatever you have kept in your office, they all will be checked. For this specific purpose, what is the purpose of this auditor? The purpose of this auditor is to check whether everything is showing a true and fair picture. Your books of accounts stand in a true manner by the auditor. So here I have picked up one definition in which I have tried to explain you word by word. Now another definition by R.G. Williams states that audit is the examination of books, examination of account and vouchers of a business. So I told you that there should be bills and vouchers to support the evidence for every payment you have done, for every expense you have shown. So the auditor will be examining your all the books of accounts, he will be checking all the accounts and the vouchers of a business. Why will he be doing this? With a view to ascertain whether or not the balance sheet is properly drawn up. So his ultimate motive is to give a claim on your work, that whether your balance sheet is properly done, to show a true and correct view of the state of affairs of the business. If you'll be scrutinizing each and every detail of your business, only then it will be authentic that your business is showing a true, correct, and a fair view of records. So these are the two definitions. You can learn any one, and there are many others also given in your book. You can pick any one which you find it easy. But the main concept here is that please understand it nicely. Next comes who conducts the audit, who will be doing this audit. There will be an independent and a qualified person who will be conducting the audit. The meaning of the term independent, I explained it to you, that he will not be biased towards business. He will not be an employee of your business, okay? And he has nothing to do with your business. Like he is not obliged to answer what you want him to answer. No, not that way. He will be making his independent view of your books of account. And he will be a qualified person. If the person is not qualified, how will he conduct your audit? When you are examining the answer sheets of a college, you yourself have to be well educated. Otherwise, how will you evaluate the answer sheets? It will be of no use. So similarly, the person who is coming to conduct the audit in your organization, he has to be a professionally qualified person. Only then he is suiting his job, he is doing justice to his job. Now, when he will come, because he is an independent person, he will be expressing a fair view. He will be giving his true opinion. That opinion will not be biased. That opinion will not be to fit into the happiness of the owners. No, he is not going to make the owner happy. He is not obliged towards the owner of the organization. So he will be giving an opinion which will be true to his own sense. On what is he going to give the opinion? He is going to give the opinion on the financial statement of the organization. There should be absolute no biasness in giving that opinion. The auditor will be giving the report whether the financial statements are true and fair or not. Okay. As I mentioned, he has no connection with the business. He is not an employee of the business. Okay. And none of his relatives are also associated to that business. Okay. He is totally independent person from outside. There should be a professional CA with proper certificate. He will be hired from outside, and this is what is called external audit, because a person from outside the organization is coming to review your accounts. Now there is one more term I would like to mention here, is the internal audit. In internal audit, one accountant of your organization who is your employee, he will be recording the transaction, and the other accountant who is also an employee of your organization, he will be checking it. So in internal audit, you are not hiring anybody from outside. Your employees only will be conducting your internal audit. The staff in an entity, in an organization, will perform the audit, and that staff only will be examining the financial reports. The verification of these reports will be done internally within the organization, and no specific qualification is required for conducting this internal audit. If a person has to conduct an internal audit, basic knowledge of accountancy is enough. One accountant from your own organization will happily conduct your internal audit. You don't need to hire anybody from outside, and the person who is conducting the internal audit, there is no compulsion that he has to be properly qualified CA, nothing of that sort. So there is a major difference between the external audit and internal audit, and I hope I have made the things clear to you. Now the auditor has to be clever enough to check whether the information which that manager has provided to him, is it enough, or is the manager trying to conceal some information, facts from him? Is there something which is cooking behind it? So the auditor has to be smart enough to extract all the information from the manager, all the relevant information. Information here means the relevant information which he wants for the books of account. He will be extracting all the information. He will be collecting all the evidence. He will be evaluating all the vouchers and all the bills, right? And then he has to check. He has to be smart enough to see if every explanation which he wants he has received. Are the people of the organization trying to hide something from him? Then he has to make that he wants every vigil on every item. So he has not to rely only on the facts which management has provided. He has to use his own brains. He has not to jump to the conclusion. He has to find the actual position of the books of accounts, whether everything is revealed in a true sense of manner. And if he thinks that something is concealed from him or they are trying to hide the facts, he can go deeper and deeper to extract the relevant information as regards to his audit. Now, when we talk about the meaning of audit, I've made the things clear to you. Now, why is the audit so required? Why is it so important? Now, listen carefully. See, when we talk about a company, the investors have invested in the company in the form of shares and debentures. The investors who have purchased their shares, they want a return on their investment. That is why they have invested in the business or the company. Otherwise, who will invest their hard-earned money? People are investing in a company because they want a return on their investment. Now the question is, who is running this company? The company is not run by the investors. The company is not managed by the investors. The company is run and managed by the management. Management looks after the operations of the company. Management looks after the income, after the expenditure. The whole system of the daily operations is managed by the managements. Investors, they don't do anything in running the enterprise, right? Now, the management acts as a steward of the company. Now, the company presents its profit and loss in the financial statements. Now, this profit and loss is the return for the investor. If there is a profit, the investor is very happy that I am getting a good profit. Investor, he may receive stock dividend. Obviously, the profit is distributed to the shareholders in the form of dividend, or they can also be awarded the cash benefit, right? And if not, then the company will have a hike in reserve. The reserve of the company will go up. So what happens is that whatever profit the company is earning, either it is returned back to the investors in the form of dividend, or it is kept as a reserve for the future operations of the company. So even if the company is keeping a reserve, that means the company had profit. That is why it kept a part of its profit in the reserve. Right? This is what the investors want. Now, how will the investor trust the financial statements to be absolutely true and fair? Because the investors, they are not a part of the daily functioning of the management. They are not a part of the financial records of the company. They have just invested and they are waiting for their return on investment. Now, the investor may be in a state of confusion as regards the facts because they don't have anything to do in the operations. Who is conducting the operations of the company? It is the management. Therefore, the need arises for an independent auditor, because the stamp of the independent auditor will satisfy the investors. Otherwise, the investors will be in a state of confusion. They will be in a dubious situation. They will be doubting the efficiency of the management. What if the management is reaping profits and hiding it from the investors? It can be possible. So to satisfy, how will the investors get satisfied that everything is running true and fair? The books of accounts are showing a true and fair view of the actual statements. So who will do that? The independent auditor. If the independent auditor will conduct the audit and give a certified stamp, yes, everything is true, then investors will get satisfied. So, independent person or the auditor, he will be examining the financial reports. He will be examining in a systematic way, because he himself will be a highly qualified, educated, professional person. Auditors are expected to give a fair opinion and a true picture, and they will be reporting, they will be submitting a report, and this is how the investors get satisfied. Because investors, they are sitting at their own homes, they are not running the company. So that independent auditor's report will satisfy the investors. Now we come to the objectives of audit. Why is the audit conducted? What are the main objectives? So dividing it into primary objective and the secondary objective. Primary ones are the main objectives. The main objective is the same. Examine the books of account. You have to match it with the voucher, with the bills, with the supporting evidence. Okay. Then check the arithmetical accuracy. Is 57 written as 57 only, or 57 is written as 570? Maybe many a time there can be an error. There can be an intentional error. There can be an unintentional error. It can be a human error also. Whatever happens, but the auditor, the main objective is to check the arithmetical accuracy of the books of account. Then check the authenticity and the validity of the transaction. If the books are showing that we met with a loss, did that loss actually happen, or it is just being shown to hide away from the facts, to conceal the profit? So the auditor has the main objective to check the authenticity and the validity of the transaction, whether the transactions have actually taken place. Further, it will also be checking whether the capital nature transactions and the revenue nature transactions has been recorded as per the criteria. Now, I hope you know what is a capital nature transaction and a revenue nature transaction. Revenues will have to be recorded in a separate manner, and the capital nature will be recorded in a separate manner, and has everything been done according to the rules. Further, the objective of auditor is also to check the statutory requirements, that is the true and the fair representation of income statements and the balance sheet. Further, verify the financial statement, give an expert opinion. So, the primary objective of the audit is to examine systematically in a nice manner, to see all the books of account, to check it with the supporting evidence, to check all the transactions, capital nature, revenue nature, check all the human errors, and check the arithmetical accuracy according to the rules, criteria, regulation, guidelines. Everything is recorded as per requirement. This is the primary objective of an audit. When I talk about the secondary objective, they are also called the subsidiary objectives, and they help to attain primary objectives. The main motive is the primary objectives, and if I have qualified it into secondary, it means they are a help to the primary objectives. So the auditor will be detecting and preventing the fraud and the error. If there is some fraud happening, the accountant is trying to commit a fraud, making his own money out of the books. So that will be detected and prevented, so that in future such a fraud does not happen. If any error has happened, maybe intentionally, maybe unintentionally, whatever the case may be, the auditor will be finding your errors. What type of errors I'm talking about is error of principle, it can be omission, it can be errors of commission, it can be compensating error. Compensating error means that once you debit the same thing and the same amount has been credited, so such errors will not affect the trial balance and the balance sheet, but error is an error which the auditor will try to find out. Okay. Undervaluation, overvaluation of stock, if something of this type has been done either by the management or the accountant, it will be found out. Then the auditor will also be advising to the manager, like this is happening, which is going on a wrong line, so please correct it. So all the advices are also given. Auditors, he cannot stop the fraud. He is not responsible to stop the fraud. The fraud has to be stopped by the management itself, but he detects it, he finds it out and informs the owner, so that the fraud and the errors can be corrected and prevented in future. So these are the objectives of audit. Next is the steps in auditing. How does the auditing take place? What are the steps that are followed? The first step is to study the organization. When an auditor is coming to audit your entity or your business, he should know about your organization. He has to study. Supposingly he is coming to audit a sugar factory, so he should know, he should do his homework about the sugar factory. If he is going to a pharmaceutical factory, he is to know the basic things about a pharmaceutical factory. Only then he will be successful in his work. So the first step is to study the organization. The auditor is supposed to know a little bit about the concern. If I am an auditor appointed for Airtel, then I am supposed to know about the structure, the branches, the operations. How are they managing? What is the Airtel doing? What is the mode of operation? What are the clients? What are the customers, right? I should be clear from whom in the concern to get the necessary information. Obviously, when I will be going in the organization, the things should be clear to me, that if I want a detailing of any expense, detailing of any voucher, whom to contact, whom to talk to, and who will be giving me all the relevant required information. Then again, the auditor, he should know about the internal control, about the internal functioning of the company, right? How are they managing inside? He has to collect the proper evidence. He has to evaluate the evidence, just as I told you. Without this evidence, the auditing is not possible. Evidence here means all the bills and the vouchers and the expenses, whatever, right? So he has to collect the evidence. He has to evaluate the evidence. First of all, he has to collect means he has to talk to the management about it. Then he will be verifying the profit and loss account, all those subsidiary books and all. And then the balance sheet also he will be verifying and checking it. Then he will be preparing the report, and then this is the final stage. He will be submitting the report to the senior shareholders. So here I come to the end of the article. I hope I have made the things very clear to you. In case you have any doubt regarding, you are more than welcome to ask me in the comment section. If you want to give me any suggestion regarding this, you are more than welcome. Please write in the comment section. Like and subscribe to my channel. Thank you for watching. Stay safe, stay blessed.